Welcome to another edition of our weekly market analysis. I'm very glad to have you join me as we dive into the gold market, which has been quite the headline grabber for last week. With prices sitting above the 2,710 mark, the highest level in over a week, we are navigating a mix of opportunities and caution. Now, let's talk about what's fueling this movement. Um, Geopolitics has once again stepped into the spotlight with escalating tensions in the Russian Ukraine war, stirring concerns of broader conflicts. And historically, such risk pushes investors towards safe haven assets like gold, keeping the market sentiment tilted to the upside. On the flip side, the resilient US economy continues to throw its weight around, and if inflation remains sticky above the Fed's 2% target, it might force policymakers to pause their easing cycle, adding strength to the US dollar along the line. Now, this tug of war is setting up an interesting dynamic for us to explore. In this session, we will be breaking down the charts from a technical perspective, identifying the key level to watch out for next week, the trend direction, and structural patterns that could set up trading opportunities for the week ahead. But before we proceed, remember this is all for educational purposes only and not financial advice. Always consult a professional financial advisor before making any investment decisions. Let's jump right into the action and see what the charts have in store for us. So, my first point of contact for this week is going to be on the daily time frame, where I do want us to have an holistic perspective into what has been going on since the beginning of the year. So we are going to be going to as far back as the month of April. That's about 8 to 9 months of historical data. And if we do that appropriately, you will see that we have a structural detail that will be helping us to understand what is going on in this market. From a holistic view, you can see that the market is obviously bullish, and as a result of this, price action had evolved into an ascending channel, as you will see here. After connecting the series of higher lows, we have the support line of the ascending channel, and when connecting the series of higher highs, we have the resistant line of the ascending channel. Now, in addition to this ascending channel, we have a couple of levels here which will be playing a significant role in understanding what is going on in the last 1 month. I think since the month of September, that's about 2 months. And one thing you will have noticed here is that ever since price action broke above the $2,540 level, this was the platform that sent price to that all-time record high at the 2790. We have seen that price action has been confined within that zone. That's about a $250 a range bound structure to work with. Now, with this situation we have here, one of the things that you will have observed is that after price action tested that record high, we saw price drop significantly, and this was attributed to the victory of Donald Trump during the recent US election, which brought price down back into the support line of the ascending channel. And immediately, price tested the support line. What did we see? We see how price continued back with the uptrend scenario. Will this be a structure that will send price to find new highs? Well, to understand this, the next potential move of price action, we do want to see the behavioral patterns of market participants that resulted into this bullish traction we've seen here in the last couple of weeks. And for us to do that, we will need to scale down into a much lower time frame, and that is the 4 hours time frame. And right there, I have a simple setup to help us navigate this market next week. But before we go down into the 4 hours time frame, it's important that we keep tabs with the fundamental factors that will be influencing the sentiment in the market next week. And of course, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart. Now, based on the asset we are monitoring for next week, we will be focusing on high impactful event from the United States economic docket. Now, the first impactful event for next week is coming in on Tuesday, that is November 26th, and we are looking forward to the publication of the FOMC minutes. Now, for those who don't know, this is a record of the discussions and decisions made by the Fed during their last meeting, and it provides insight into the Fed's view on the US economy and future monetary policy. Then, fast forward to Wednesday, November 27, we will be looking at the core PCE, that is the core personal consumption expenditure, which measures inflation by tracking prices of goods and services, excluding volatile food and energy costs. A high PCE reading indicates stronger inflation, which can lead to a stronger US dollar. Then finally, we will be looking at the gross domestic product annualized for quarter two, which is usually expressed in annual growth rate, measures the total value of goods and services produced by the US economy in the last quarter. So these are the high impactful events that we will be looking forward to. And of course, the anticipation of this event usually has its own way of influencing how market participants will behave, and this obviously will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame where I have taken into account the behavioral patterns of participants since the beginning of this month. And right here on the 4 hours time frame, this was what I was able to come up with. The first thing you would notice here is that since that US election, we saw how price dropped to the downside, making this area between the 2,710 and the $2,685 area a temporary supply zone. As you will see, this was where the bearish momentum began. Look at that beautiful engulfing bearish candle, break through that structure. Price came back to retest, and look at how it dropped into the 2,540 zone. Now, in the last couple of weeks, we have seen how price action evolved into an ascending channel. Look at what we have here, the resistant line of the ascending channel. And then we also have the support line of the ascending channel. And this situation here saw price action climb back above what will be my key level for this week, and that is at the 2,685. And you know how we use our key level. When price remains above the key level, we definitely want to be looking out for patterns and structures that support the idea of buying. But if price breaks down the key level, then we want to be looking out for structural details that support selling ideas. Now, with the situation we have right now, price action is currently trading above our key level. And remember, this area is just around that supply zone that sent price crashing at the beginning of this month. So, the question as we head into the new week is, will buy pressure be sustained above this level to continue the momentum above the 2,710 area, or will selling pressure come back into the market to bring price back down the 2,685 level? And in fact, if price goes back down the 2685, price would have broken down that support line of the ascending channel for the first time in 2 weeks, sending a ripple of selling ideas into this particular market. So you can see that we are at a crucial juncture, as depending on how market participant reacts to the zone at the beginning of the week will determine where we shall be going. So to give a quick summary of what I'm saying here, I will definitely be looking out for buying opportunities as long as price remains above the support line of the ascending channel and the 2685, and we'll be looking for selling ideas only if this confluence is got breached and broken to the downside. So let's see how the market will play out around this area. Trust me, I will be with you in the comment section of this video at the beginning of the week to give us an update on what I think will happen after monitoring price action for the first 8 to 10 hours of the new week. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. And if you haven't yet, consider subscribing for more insights, weekend market preps, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.